Hold on to your hats, folks, because things in Silicon Valley just got very interesting. Intel, the once mighty chip giant, just took a nosedive on Wall Street. We're talking a record-breaking plunge, the kind that makes investors sweat and financial analysts reach for the smelling salts. So what happened? Well, Intel released its latest earnings report, and let's just say it wasn't pretty. Earnings were way below expectations. The outlook for the rest of the year? Bleak, to put it mildly. Investors, who are notoriously fickle creatures, reacted with all the grace of a herd of startled gazelles. They dumped Intel stock like it was on fire, sending the price plummeting faster than a SpaceX rocket booster on its way back to Earth. This wasn't just a blip, people. This was a full-blown crisis for a company that was once synonymous with computing itself. It was a stark reminder that in the tech world, yesterday's giants can quickly become tomorrow's cautionary tales.
Okay, so we know Intel's stock crashed, but what exactly went wrong? In a nutshell, they missed their financial targets by a lot. It's like ordering a pizza and getting a sad, wilted salad instead. Except in this case, the pizza is billions of dollars in revenue, and the salad is a plate of investor disappointment. Intel's revenue was down significantly. Their profits, even worse. They also issued a very cautious forecast for the coming months, which is corporate speak for batten down the hatches, folks, because it's going to be a bumpy ride. The problem wasn't just one bad quarter, though. It was a perfect storm of challenges, from slowing PC sales, remember those, to fierce competition from rivals like AMD, who are starting to look less like underdogs and more like the alpha wolves of the semiconductor pack.
So what's a tech giant to do when faced with a stock market meltdown and a future that looks shakier than a Jenga tower built by a toddler? Well, if you're Intel, you announce a major restructuring plan. And by major, we mean major. Think layoffs, budget cuts, and a whole lot of corporate jargon about streamlining operations and focusing on core competencies. Basically, they're hitting the reset button and hoping for the best. But will it be enough? Intel is betting big on new factories and trying to catch up to Taiwan's semiconductor manufacturing company, TSMC, the current king of the chip-making hill. It's a risky move, like trying to outrun a cheetah while wearing cement shoes. But hey, desperate times call for desperate measures, right?
Amidst all the doom and gloom, there are a few potential bright spots for Intel. One of them is the world of data centers and artificial intelligence. Remember all those memes about the metaverse and AI taking over the world? Well, someone needs to build the chips that power all that futuristic tech, and Intel wants to be that someone. They're pouring resources into developing chips specifically designed for data centers and AI applications. It's a huge market with even bigger potential, but there's just one tiny problem: competition. NVIDIA, the current darling of the AI chip world, is already way ahead of the game. They're like the Usain Bolt of AI chips, while Intel is still lacing up its sneakers. Can Intel catch up? Only time will tell.
Section 5. The client crunch. Can Intel fight back? While data centers and AI might be the future, Intel's bread and butter has always been the client market. We're talking about the chips that power your laptops, desktops, and even those smart refrigerators that can order groceries for you. But even in this familiar territory, Intel is facing some serious heat. AMD, their arch-rival, is nipping at their heels with faster, more efficient chips. And then there's Qualcomm, a company known for making chips for your phone, who suddenly decided to muscle into the PC market like a bodybuilder crashing a yoga class. Intel is fighting back with new generations of processors, but it's a tough battle. It's like trying to defend your title as the world's best air guitarist, while everyone else is suddenly playing real guitars.
Section 6. Building a foundry. Easier said than done. Remember TSMC, the chip-making behemoth we mentioned earlier? Well, Intel wants to be more like them. They're venturing into the foundry business, which means they want to manufacture chips for other companies. It's a bold move, like opening a bakery when you've only ever made toast in your life. The problem is, TSMC is already the undisputed king of the foundry world. They've got the experience, the technology, and a client list that reads like a who's who of the tech industry. Intel is investing heavily in building its foundry capabilities, but it's a long and expensive process. It's like trying to build a skyscraper out of toothpicks. Sure, it's technically possible, but it's going to take a lot of time, effort, and probably a few frustrated architects.
Section 7. Intel's crossroads, innovation, or obsolescence. So, where does this all leave Intel? At a crossroads, my friends. One path leads to innovation, reinvention, and a return to glory. The other path? Well, it leads to irrelevance, overshadowed by nimbler, more innovative competitors. The next few years will be crucial for Intel. They need to execute their restructuring plan flawlessly, regain their technological edge, and convince investors that they're still a good bet. It's a tall order, but hey, this is the tech industry, where miracles happen every day. Will Intel rise from the ashes like a silicon phoenix? Or will they become another cautionary tale of a once great company that failed to adapt?
Section 8. Stay tuned. The future is unwritten. This is where we, the audience, come in. Keep an eye on Intel. Watch their moves, their products, and their stock price. Will they regain their former glory? Can they overcome the challenges they face and emerge stronger than ever? The future is unwritten, folks. And in the fast-paced world of technology, that's what makes it so exciting. Stay tuned.